Nvidia has now surpassed the market cap of the entire German stock market. This is one of the most significant growth stories of recent times. Nvidia alone accounts for 34.5% of the returns of the S&P 500 in 2024. This remarkable growth places Nvidia just shy of being the largest component in the S&P 500, with the stock now making up 7% of the S&P 500's weight. This means that Nvidia's performance now has substantial influence on the broad market's return and price action. So any investor with holdings in the S&P 500 in 2024 now have a significant stake in Nvidia, whether they like it or not. By looking at Nvidia's valuations, profits, competition, and price action, we're going to explore all of the key factors that traders should consider on Nvidia and whether Nvidia is showing any signs of being in a speculative bubble. Nvidia is strategically positioned for the AI revolution. They sell the chips that are required to implement and train AI. Major tech companies like Microsoft, Google, and more recently Apple with its announcement of Apple Intelligence are all striving to integrate AI into their products. These three tech giants have a combined market cap of $9.79 trillion, which exceeds the combined GDP of Germany, France, and Italy. All three of these companies are investing heavily in AI. They've invested $104.5 billion just in research and development over the last year. These enormous investments are driving significant demand for semiconductor chips that Nvidia happens to produce. Since the start of 2023, Nvidia's stock price has increased sevenfold. Its technical price action continues to show strength with a strong uptrend, and all of the key moving averages are pointing upwards, and the price is staying consistently above these moving averages. The old saying, "Don't fight the trend," is still very much relevant here. But many are drawing comparisons between Nvidia's price action today and the technology bubble of the late 1990s. This is the price action of Cisco during the dot-com bubble. Cisco had a very similar period of extremely strong price action like Nvidia, but between 1998 and 2000. Cisco produced networking hardware such as routers and switches, which were a similarly essential component for the growing internet infrastructure at the time. This euphoric phase was then followed by a significant market crash, with the price of the stock crashing by 90% over the course of the 3 years following the March 2000 peak. The similarities of this extreme behavior understandably raise concerns amongst investors who fear a similar unfolding of events for Nvidia. The difference with Nvidia, however, is that this large price increase is very much supported by an increase in profits. Nvidia's operating income has surged from $5.5 billion at the beginning of 2023 to $33 billion at the beginning of 2024. So that's a six-fold increase in Nvidia's profits that helps explain the substantial rise that's occurred on the stock. As long as large-cap tech companies continue to rush to implement AI into their business model, Nvidia can continue to benefit immensely from this trend. Now, there is a key similarity between Nvidia and Cisco today, and that is that Nvidia's stock is undeniably expensive. As of June of 2024, the price-to-earnings ratio of Nvidia is at 70. That's very elevated compared to the median PE ratio of 15 for stocks in the S&P 500. This shows that investors are already paying a significant premium to own a piece of Nvidia. It's worth noting, however, that Cisco's PE ratio in 2000 was at 171, more than double Nvidia's current PE ratio. Also, Nvidia's PE ratio has remained around 60 to 70 for the past 3 years. It may be that Nvidia stays this expensive as long as AI chip demand remains strong. If demand cools, however, or the economy slows down, Nvidia's PE ratio could deflate, possibly risking a substantial loss if it were to come back down to, for example, 30. For now, however, the high valuation of Nvidia is largely justified by its dominant position in the AI chip market. Nvidia has pioneered GPU technology, which is essential for AI applications. Nvidia has also established strong partnerships with major cloud providers like Amazon Web Services, Google Cloud, and Microsoft Azure that represent very reliable and wealthy customers for Nvidia, boosting up the company's sales, brand reputation, and trust within the tech community. But despite all of this, Nvidia does face increasing competition in this space. AMD, Intel, Qualcomm, and Graphcore are all actively working to capture a larger share of the AI chip market. These companies are investing heavily in research and development to create AI chips that can rival Nvidia's. And big tech companies like Amazon, Google, and Apple are already producing their own chips and deploying resources to become competitive players in the AI hardware space. As all of these companies innovate and improve their technology, they could pose a significant challenge for Nvidia's dominance in the market. If you're ready to start placing trades yourself, you can do so at Capital.com, where you'll be able to execute trades easily and instantaneously.